This is a course of business finance, and this is course is also called Financial Management 1. And in this course, we are dealing with the basic foundations of finance, and we have already covered the topic time value of money. And after that, now we are going to study long-term securities, the valuation of long-term securities. We will evaluate and we will value or we will price the long-term securities. When we say long-term securities, what do we mean by this? Long-term security means it includes both types of securities, debt securities and equity securities. Debt instruments भी आएंगे and we will also include equity instruments. So in this topic, we'll cover different valuation concepts, bond valuation, preferred stock, common stock, and rate of return or yields. Bond is a debt instrument. Liquidation value. Liquidation value means when the asset or group of assets is sold separately from its operating organization. Generally we say business is liquidated, business is going to end, business is uh, someone is selling their business, so liquidate कहते हैं उसको, liquidate कर देना business को. Going concern means the business is going to continue its operations in the future. They are not going to liquidate or they are not going to sold it in the future. So that is called going concern value. Book value according to the book, according to your books of accounts. Book value of an asset means the accounting value of an asset. For example, company has some vehicle, a big vehicle, for example, for transportation or cargo, big truck. So book value of a truck would be that is shown in their books, but the market value can be different from the book value. And how to calculate the book value? It is calculated by assets cost minus its accumulated depreciation. Cost minus accumulated depreciation is the book value of an asset. Similarly, firm के case में, in the cases of companies or firms, total assets minus liabilities and preferred stock as listed on the balance sheet. Total assets में से liabilities और preferred stock को minus करेंगे तो we'll have a book value of a firm. Market value of a company can be a different thing, and the book value of a company can be a different thing. Market value जिस पे market में trade हो रहा है, that is being traded in the market. Intrinsic value means that ought to have. It means कि actual ideal value. It means all the factors, inside information, external information, all factors have been taken into account, and now what is the price? That is intrinsic price or intrinsic value. This is an ideal condition. Prices tend to move towards intrinsic value, but practically they are not exactly at intrinsic value, they are close to intrinsic value. Intrinsic value means what it ideally should be based on all the information. That is called intrinsic value. Now comes the one of the important security, that is bond. Bonds are a very important topic, one of the important topics in finance. Bond, keep in mind, bond is a debt instrument. This is not an equity instrument. Bond is a debt instrument. If we see the definition of a bond, bond is a long-term debt instrument issued by a corporation or government. So see, bonds can be issued by a company and they can also be issued by any government. Pakistan has also issued few bonds Pakistan investment bonds, Panda bonds, different bonds Pakistan international market में भी float किए. तो bonds companies भी float करती हैं. Pakistan में they are not very popular the bonds, but internationally, globally, in many countries, bonds are very common source of financing for companies. And for the understanding of bonds or for the calculation of questions regarding bond, keep in mind that face value of the bond would be $1,000 here. So the face value of a bond is fixed. It is $1,000. This is the face value of a bond. The market value can be different, and we'll understand this face value concept or the bond concept more when we'll solve some questions regarding it. So the face value, याद रखें, the face value is 1,000. Coupon rate. We have different types of, one is called zero coupon bond, another is non-zero. Zero coupon bonds means the company or government is paying 0% profit or interest on that bonds. But if they are paying 8%, 7%, that means non-zero. So that is the coupon rate. So the bonds coupon rate is the stated rate of interest, the annual interest payment divided by the bonds face value. The discount rate, इसके बाद discount rate, the discount rate is dependent on the risk of the bond and is composed of the risk-free rate plus a risk per premium. Discount rate को हम ये भी कहते हैं capitalization rate or required rate of return. That is called discount rate. इसका मतलब risk-free rate plus a premium for that investment. The coupon rate, discount rate, these are the definitions, and we will understand it more when it will try to solve these questions. So this is the non-zero coupon paying bond. Remember, this is the formula, and we have to solve it by manually, and we can also use the tables for it. So this is V. V here is value of a bond. V shows value of a bond. I, the capital I here is this capital I is the coupon payment or interest payment that should be in monetary terms, that should be in dollars. This I would be written in monetary form. It can be in a currency form, dollar or rupees. MV is the maturity value. This is the face value. Maturity value means face value. As I have just explained, the maturity value or the face value would be $1,000 in case of bond. The small k is the discount rate, the capitalization rate, and n is the time period. And if we want to use the tables that are given at the end of the book, so we can use this formula. V is equal to I PVIFA and MV PVIFA. So see the difference here, we have A and here no A. A means A here is annuity. It means that we are getting this I, the coupon payment or the interest payment every year or every quarter, whatever the compounding frequency is. So we are getting it every year. So that's why we are having A. Maturity value, face value is 1,000. We will get $1,000 at the end of the life of this security. So this would be received only once. So we are not writing A here. This is only PVIF. So this is the formula. We have to memorize this formula to solve questions regarding bonds. I plus MV. So this is a question, practice question. We can say bond C has $1,000 face value and provides an 8% annual coupon for 30 years. Appropriate discount rate here is 10%. What is the value of the coupon bond? So we have to value, we have to check, we have to do working कि जी हमारे ख्याल से what should be the value of this bond. We have just seen the formula. We will apply the values in that formula. So out of this question, what would be the value of capital I? So capital I is 8% of 1,000. That means $80. $80 would be used as a capital I. Small n is 30. Time period is 30. Discount rate KD small k is 10%. So we have to calculate value of the coupon bond. So we can calculate V by applying that formula. So you can see on the screen, 80 is I, this 10% is the discount rate, 30 is time period, this 1,000 is the maturity value, the face value, 10% is discount rate, and 30 is years. And we get these values from the tables 9.427 from table number 4 and 0.057 from table number 2. So the answer here is 811. 754 plus 57. It means if one wants to make an investment and this is an option, so according to one's calculation, the answer is 811, value of a bond. So if the market price of a bond is lower than 811, the investor will buy this bond. And if the market value is more than it, for example, market value is 825. So it means कि हमने जो working किया that is 811, so it is overpriced. So investor would sell this bond. So this is the valuation of a bond. 811 here it is.
if there is a zero coupon bond, अगर कोई bond zero coupon bond है, zero means they are receiving nothing every year, they are receiving zero interest or payment every year. This is called zero coupon bond. Capital I would be zero. So when zero is multiplied by anything, the whole value of I here is removed. The formulas where we is will be very simple. Maturity value over 1 plus KD can power n. Maturity value is the face value, and that is $1,000. So zero coupon bond is a bond that pays no interest but sells at a deep discount from its face value. It provides compensation to investors in the form of price appreciation. You can also see in this question, the previous question, that bond is giving 8%, जबकि discount rate is 10%. The bond is giving less than 10%. That is why the answer here is less than 1,000. So if the same question, 1,000 and the life is 30 years, and the discount rate is 10%, what should be the value of this bond? Here, the bond is paying nothing. So what would be the value of a bond? Like if would, but one is weighing the option K whether he should buy the bond and he will receive $1,000 at maturity after 30 years. How much he should invest now? या how much should be the value of this bond? कि वो भी इस bond को purchase कर ले और after 30 years उसको $1,000 मिले. So it should be at a very discount rate, or it should be very discounted. Price should be very low. So answer here would be so the answer would be $57. Means according to one's estimate, the value of the bond is $57 if it is paying nothing for 30 years, and only 1,000 would be received at a maturity at after 30 years. That's maturity time. Maturity value is $1,000. So $57 would be the value if this is a non-zero, if this is a zero coupon bond. So this is the concept of bond. उसके बाद है compounding. But till now we have covered valuation of a bond. One is non-zero and the second is zero coupon bond. So by this, by applying these formulas, we can evaluate or we can value the long-term security that is bond here. The bonds are common issued by governments and also by companies. This is the topic of bonds as a long-term security.